Okay, guys, so let's get cracking. Big day ahead, of course. Finally, it's here. We've been waiting for this day, well, really, I guess, for 6 weeks because the end of October, Draghi made some promises and everyone's got a little bit overexcited about what he's going to deliver. And today we find out. And we'll talk in detail, obviously, about this as we go through the morning. It's obviously the big event of the day, certainly the big event of the week. Could easily be the single biggest event of the month, even though it might be the month where the Fed also hiked rates for the first time for 10 years. So big session ahead for the ECB. So we'll talk about that in a sec, but let's just have a look back at yesterday and some pretty key developments yesterday as well. Let's talk firstly about oil. Then we'll talk about the Fed and Yellen's comments. And then we'll just have a look at the day ahead and think a bit more about the ECB and what they might do and will it be enough to satisfy markets. So firstly then, oil. Big day for oil yesterday. Huge day. I mean, trading down below $40. This is on the continuation chart here. So down below $40. And if I just quickly go to a daily chart, this is on a continuation setting. Then we took out the low from November. And, really for the January contract, it was basically testing the low of the year, pretty much. Now, for the continuation chart, we still have further to go. Of course, the low of the year officially back in August was 37.75, but you can see really yesterday key test of $40, massive session with a more than a 5% drop. 4.5% drop in the end, most importantly closing below $40. I mean, which we're drifting and trading just back up above that now, but the lowest close since that August surge to the downside. Now, if I just go to a 1 hour chart, this does not tell the story. I mean, just before the kind of big sell-off, we actually got a big spike higher, and this is why we've got such a huge range for the session. We spiked and actually made a new high just before the oil inventory data came out, and ultimately strong surge down below $40. But actually, the comments to start with at 10 minutes, about 3:15 yesterday, Iranian press suggests the majority of OPEC members agree on an output cut, according to Iran. So this hit the news wires at 3:15. Iranian press suggesting the majority of OPEC members agree on an output cut. Of course, we've got the meeting tomorrow, the OPEC meeting tomorrow. But this sent markets sharply higher, or sent oil sharply higher, off the idea that actually maybe they are going to cut production at tomorrow's meeting. However, just kind of 3 minutes later, a follow-up comment saying that Saudi Arabia and Gulf Arab countries are not among the countries supporting a cut, according to the Iranian press. Classic sort of headline risk where you're getting a comment quickly followed by another comment which completely invalidates the first one. But the first comment, as soon as it hits the wires, appears dramatic, and you get the instant reaction. It's just completely false. And ultimately, we reversed the whole lot. Then, just literally 15 or even 10 minutes later, we got the oil inventory data that delivered a build of over 1 million barrels when we had expected a drawdown of 800,000. And then the other interesting thing about the inventory numbers yesterday was the fact that the output rose. US oil output increased by 0.4%, which is not a small increase, back up above 9.2 million barrels a day. So this kind of obviously broke the $41 handle in style, and we drove down and tested and indeed briefly broke $40. And this all sets us up nicely, because we go into the OPEC meeting, which officially is tomorrow. But of course, all these OPEC oil ministers are turning up in Vienna today, and you're almost certainly going to get very frequent headline risk. You're going to get a lot of these OPEC oil ministers making comments today. We may even get the decision, in inverted commas, from tomorrow's meeting leaked today. What I think's, what we've got several things to think about. Firstly, Iran, and we've had more comments on this morning. Iran, so we just literally like 20 minutes ago, the Iranian oil minister saying, once sanctions end, Iran has the right to increase output. OPEC needs a long-term strategy. The minister said, we're capable of increasing production by at least 500,000 barrels a day. He said that Iran are ready to discuss new output ceiling with OPEC members. So you've got the Iranian angle, which is output positive. Iran are definitely going to step it up when sanctions are released. Okay, so that's obviously negative for price. But then Iran are saying, look, we want to increase production, but we don't want price to go down. So other OPEC nations, you're going to have to cut. Okay, so this is going to be one discussion at this meeting. Are the rest of OPEC prepared to cut production to make room for Iran's increase in production and ultimately OPEC's total output not changing? That's one discussion. The other discussion is, do OPEC want to reduce their production overall? They currently pump 30 million barrels a day. Are they going to reduce that or not? Of course, the strategy has been to not reduce it and keep prices low, trying to squeeze out the shale producers and win back market share. Now, there was an article in the FT this morning, actually, just talking about what's most likely going to happen. I mean, Saudi Arabia are basically saying, I think the bottom line is they're basically saying, look, we are up for production cuts, but, and it's a big but, only if non-OPEC members also cut. And particularly, that's a comment for Russia. So basically, I think the bottom line is Saudi Arabia will cut production, but only if Russia do as well. Now, there was supposed to be a meeting between Russia and OPEC before tomorrow's OPEC meeting in Vienna. Now, I'm sure that meeting was all about, I think Saudi's strategy was, look, if we can persuade Russia to cut production, then fine, at the OPEC meeting, we will also agree with the non-Gulf members of OPEC who all want a cut because they're really hurting with price at $40. I think the Saudis were probably saying, look, if we can get Russia to agree, let's go with a cut at the OPEC meeting. It looks like that's not going to happen because the Russian meeting has been delayed until a couple of weeks' time, i.e. after this OPEC meeting tomorrow. So I think the chances of a cut at tomorrow's meeting are almost zero, despite the fact that probably well over half of the OPEC members want to cut. Unfortunately, really, even though this is a group of nations, really it's one who makes the decisions, and that's Saudi Arabia. And as it stands, without Russia willing to cut, Saudi isn't going to cut, and now that's where we are. So I don't think we're going to get a production cut. However, I do think we might get hints that production cuts may come in 2016, but only if Russia are keen on getting involved. So we'll see. But certainly price going into the meeting could we're right down on the $40 handle. This is going to put more pressure. This gives more ammunition to those OPEC members that are arguing for a cut in production. This gives them real ammunition with oil now over $20 lower than it was when they had their last meeting back in June. So we'll see. All to play for, but $40 is obviously, you can see on my chart here, phenomenally important. First test of it yesterday, it held just about. But if we break $40 off an OPEC decision that's no cut, then most likely we're going to get a pretty straightforward run down to test the low of the year at 37.75. Okay, that's oil. Lots of other stuff to talk about. Let's talk about the Fed. Check out my S&P chart here. Big move to the downside yesterday into the European close, then a bigger move after the European close as Yellen made her comments. Okay, so important updates from Yellen yesterday, and as you can see from my S&P chart, it's comments that were taken as hawkish, if you like, and really just the idea that she was, final comments before the Fed meeting in 2 weeks, And essentially, she's just continuing to direct us towards the fact that they're going to hike rates. So she confirms that on balance, economic and financial information received since our October meeting has been consistent with our expectations of continued improvement in the labor market. And that helps strengthen confidence that inflation will move back to our 2% objective over the medium term. And then she said the comment, she added that liftoff is a day that she expects everyone has been looking forward to, and warned of the dangers from delaying the start of normalization for too long. So, you got a hawkish reaction yesterday to this, particularly in the equity space. The S&P had been up above 2100 as we went through the morning session. And if I show you on a daily chart, this sell-off yesterday is particularly important. Or let me show you on the weekly chart I showed you yesterday. It's particularly important because we pulled away from this downward trend line. We've got 4 key reference points on this downward trend line now for 2015. Now, as you can see on this chart, though, in the grand scheme of things, we're still right up here at the top. And obviously, ECB day certainly has the power to push this S&P back up through 2100 if Draghi delivers in style. Personally, I don't think he will. So it could well be that this is a perfect top again, and we get now a trajectory to the downside as the ECB slightly disappoint, and then we move towards a meeting where the Fed are going to hike rates, and the S&P fetches up back below 2000 as we go into Christmas. This is my prediction. Of course, we'll have to wait and see whether I'm right. But a nice confirmation technically of this downward trend line. So these comments also fed through to moves elsewhere. We had the dollar. You can see it was a really pretty wild session, it has to be said, for euro dollar yesterday. A big range, a 90 pip range, plenty of volatility through the afternoon. And then when Yellen made her comment, big breakout to the downside, breaking the low from Monday, breaking to a new 7-8 month low, but then a big reversal, a real nasty reversal, and a big one, an 80 pip reversal here going into the US close, which is pretty interesting. And I'm just going to bring in a chart of the dollar index actually, because significantly, it's quite incredible actually, but the dollar index, let me just show you on a chart here. The dollar index here made a new 12-year high yesterday, taking out the previous high back at the start of the year. The dollar index officially made a 12-year high. You've got to go back to 2003 to find the last time the dollar was this high against the basket of currencies. So you've certainly got Fed expectations creeping higher. Here's the chart of the percentage probabilities. So that it's edged slightly higher. I think yesterday it was like 72% that we're going to get a hike in December. It's now 74%. But I think, I've been saying this for a while now. I think they're definitely going to hike. I don't think there's any question. I think the only way they won't hike is if the ECB deliver a monster package today that sends the euro dollar down to parity. That's the only reason I think the Fed are not going to, they might blink and bottle it and pull back. That's the only reason I think they're not going to hike. So, and I don't think Draghi will deliver that big package today. So I think the hike is happening. For me, it's more important, when's the second hike going to come? And as it stands, you've got June 2015 as the most probable. Now, I think this is too slow. I think markets are pricing in a trajectory that's too low. If you look at the Fed dot plot matrix, well, then they're saying 100 basis points per year. That's raising interest rates by 1% a year. That means if they want to go at 0.25% increments, they need to hike every quarter. So I think the markets have got this wrong. I think we need to be pricing in a steeper trajectory with the next hike being in March, then another one in June. So it'll be interesting at the end of the month, well, not the end of the month, 16th of December is the Fed meeting. Will they hike? I think yes, but more importantly, by the time we get there, When's the second hike going to come? I think that now becomes the bigger story. Right, this is the Fed. That's one thing, but we've got to put that away now. I mean, it certainly created some action yesterday after the European close, without a doubt. It was an important event of the day. You know, you had yields rising. We had that T-note rally earlier in the week that got given back as rate hike probability inched higher. Right, let's talk about the big event of the day, and let's bring in the calendar first, just see, because we do have other stuff. It's not just the ECB, but actually it might as well be, because the rest of the stuff pales into insignificance compared to what might or might not happen at 12:45 and at 1:30. But before that, we do have services PMI data, and we've just been getting these numbers come through. So for the Eurozone as a whole, it's a touch below expectation at 54.2. We had expected 54.6. I'm just seeing an ECB comment. Sorry, I thought that might be important, but they're just saying that, I guess this is more like a Fed style. They're saying that in the future they will not discuss monetary policy with the media within 7 days of the next meeting, which is very much what the Fed do. Anyway, that's kind of not relevant. Right, so German services PMI came in line at 55.6, but because their manufacturing slipped, the composite's lower. So look, we've been getting these services numbers, which, you know, on ECB day, you know, on any other day would be important, but on ECB day, it's kind of not. What will be important is that I think the ISM non-manufacturing number from the US this afternoon, that's because the manufacturing number earlier in the week was so bad. The divergence between the two is at record levels, and we really need a strong non-manufacturing number this afternoon to offset the fact that the manufacturing number slid below 50. So another curveball in this Fed roller coaster could be if we get a real sharp contract or pull lower in the ISM non-manufacturing number. If that pulls sharply lower, then that could be something the Fed need to take account of. Can they hike rates just as the ISMs take a big turn for the worse? So we'll see. It's really important. This ISM number at 3 o'clock is nice and solid. Okay, so that's certainly the biggest US event of the day. But kind of forget all of that, because ultimately what happens at 12:45 is key. So here's what markets are basically expecting, and I think they're expecting too much. The Fed, they're expecting the ECB to cut interest rates. That's certainly cut the deposit rate, with others and some thinking they're going to cut the refi rate as well. They think that they're going to increase the timetable. So currently the QE program's due to end September 2016. Markets are pricing in for an extension of that to at least March 2017. So a 6-month extension. Also, markets are pricing in an increase in the pace of monthly purchases from 60 billion per month up to 70 billion per month. They're also expecting the ECB to increase the pool of assets that are available for purchase as part of this program by not only beginning to buy stuff like municipal bonds, but also by scrapping the deposit rate floor. That's the full package. That's the bazooka. And I don't think we're going to get it. That's my personal view. Markets do, though, and so markets are priced for this. I think it's a big ask for Draghi to deliver on all of those fronts. It would be, well, it would be pretty spectacular and give the Fed a big problem, I think, if Draghi delivers on all of that. Just to give you an idea on some of the big guns, what are they expecting? Deutsche are going for this 3-pronged easing announcement. Deutsche Bank think that they'll increase the monthly purchases by 10 billion, so to make it 70 billion a month. They think they'll extend the program by 6 months to March 2017. They think they're going to cut the deposit rate by 10 basis points. They think they're going to cut the refi rate by 10 basis points. They also think they're going to remove the yield floor. I think Deutsche are going for the bazooka option. Deutsche Bank think Draghi's going to deliver the whole lot. There are others who think different. So Goldman's and HSBC are kind of more in line with my thoughts. Goldman's think that they'll cut the deposit rate by 10 basis points and they'll extend the QE program by 6 months. That's it. Goldman think nothing else. I think that's what I think. I think they're only going to cut the deposit rate. I don't think they'll cut the refi rate. I don't think they're going to want to take the refi rate into negative territory. I think they'll cut the deposit rate definitely, and I think they'll definitely extend the program to March 2017 at least. But I don't think they'll increase the pace of purchases on a monthly basis. I don't think they'll remove the yield floor. They will almost certainly, though, announce they're going to start buying stuff like municipal bonds. HSBC are also kind of in line. The bank, HSBC, is expecting the ECB to drop the September 2016 timing. They're implying maybe they'll leave it as open-ended, and they think they'll cut the deposit rate. So you've got quite a lot of difference of opinion, of course, which makes it such an interesting event, because whatever happens, markets are going to move. You know, this is the beauty of going into a massive event where uncertainty is still high. You're going to get big movement here. There's going to be big moves at 12:45 when the announcements come. There'll then be big moves at 1:30 when the press conference begins. Okay, so at 12:45, we're going to find out whether they're going to cut interest rates. I'll have to check nearer the time whether they're going to announce changes to the QE program at 12:45. I imagine they probably will, but maybe there'll be more detail on that in the press conference. But, you know, I think this morning, what's happening, you know, let's check out European equities this morning. They got dragged lower last night in line with the US equity moves off the back of Yellen's hawkishness. But this morning they've bounced, okay? So you've got a little bit of fresh optimism this morning, you know, bouncing off those low levels going into the US close last night. So equity markets are okay. There was nervousness earlier in the week. We've had 2 down days in a row this week, and sure, we're up on the day at the moment, but of course, whether we finish up on the day will be entirely in the hands of Mario Draghi. So this morning, it's a little bit, you know, cautious optimism, I'd say, that Draghi's going to deliver. You know, you've seen this with the euro. I mean, the euro is all over the place yesterday against the dollar, but you've got euro weakness this morning. So again, a little bit of cautious optimism on ECB morning. The bunds are a little bit more cagey. Not much movement on bunds. Tight range here, down around the kind of bottom end of yesterday's range. But I'd say looking at the euro, looking at equities, you've got some cautious optimism. The S&P, check out where we just topped out, 50% fib of yesterday's sell-off. So all to play for. We're going to talk about, you know, this stuff in detail, of course, as we go through the morning. Ahead 12:45 events, we'll be assessing all the different options, you know, looking at all the different tools that are available, looking at what markets have got priced in, looking at all the different variables within those kind of 3 categories: the interest rate cut, the extension of the asset purchase, both from a timing point of view, plus also a speed of purchase point of view. All right, so dramatic day. Just be aware, you're probably going to get, well, we do have European retail sales at 10 o'clock. So there is other stuff happening. We've got services PMIs from the UK at 9:30. But I would really keep your powder dry. Don't be the person who's hit their daily stop before Draghi. I mean, do not be that person, okay? Keep it tight. Sure, there might be a little bit of opportunity here or there this morning, but I'd keep it short-term trades with modest profit expectations. The big event is not this morning, okay? All right, enjoy. Thanks.